Wall Street just had its best day in 16 years. The Nasdaq closed up 12%, the S&P up 9.5%, and the Dow soared almost 3,000 points. That is after President Donald Trump announced he was putting a 90-day pause on all reciprocal tariffs, bringing all countries to a 10% universal tariff, except for China. He ratcheted up those tariffs to 125%, but not before damage was done. Since President Trump took office, the market has shed $11 trillion, $6 trillion alone in the last week, and people's 401ks suffered because of it. Now, recession fears can be tamed down a little bit, but Goldman Sachs still says there's a 45% chance. And investors here that I spoke to and traders on the floor say they're expecting still a bumpy road ahead.
We are, of course, watching Wall Street, where markets have gone up after President Trump announced a 90-day pause on the vast majority of countries. The exception, China, which will now face even stiffer tariffs, 125%. But the news that essentially all the other tariffs will drop to 10% for the next 90 days is getting a very enthusiastic reaction, as you can see from investors. We heard from Treasury Secretary Scott Bessent just a few minutes ago, who essentially portrayed all of this as part of a grand strategy.
So there are 10% tariffs on a whole bunch of countries, like 75 countries. And so that's important to note. That's still dramatically higher than what, the global trading system is used to. But not that 46%, 49%, some of those really big, steep numbers that were going to be so troubling, except China. China is still, the president really putting the screws to China and raising the tariff rate there. A lot, 125%. Remember, the U.S. gets so much stuff from China. I mean, if you look around, walk down the street, Chinese goods are everywhere. So that will have a dramatic impact. In terms of the rebound in the stock market, really astonishing. This, you don't often see a big move like this, Chris. You've got about I think more than half of the losses of the past few days have now been erased, just because of that one Truth Social post from the president, and then that appearance on television from the Treasury Secretary.
Just a few hours later, there was a pause put in on the tariffs. Can you walk us through what you were thinking about why you decided to put a 90-day pause?
Well, I thought that people were jumping a little bit out of line. They were getting yippy, They were getting a little bit yippy, a little bit afraid, unlike these champions. Because we have a big job to do. No other president would have done what I did. No other president. I know the presidents, they wouldn't have done it. And it had to be done. What was happening to us on trade, not only with, if you look at it, not only with China, but China was by far the biggest abuser in history, and others also, but somebody had to do it. They had to stop because it was not sustainable. Last year, China made $1 trillion off trade with the United States. That's not right. And now I've reversed it. It's for a short period of time, but we made $2 billion. We're making now $2 billion a day. And somebody had to do it.
Is this market manipulation?
No.
Why not? If it was a plan, if it was always the plan, how is this not market manipulation?
It's not market manipulation, sir.
Well, then what is it? Because it sure is not a strategy.
We're trying to reset the global trade system.
It's
offshored all of our factories.
And what has that done? How have you achieved any of that? But to enact enormous harm on the American people, which was our concern from the very beginning. Tariffs are a tool. It can be used in the appropriate way to protect U.S. jobs and small businesses. But that's not what this does.
The president's latest statement regarding his America First trade plan. As you all know, the president just put out a statement announcing an additional tariff on China. The tariff on China will now go up to 125% because China imprudently decided to retaliate against the United States. And as I said at the podium yesterday, when you punch at the United States of America, President Trump is going to punch back harder. In that same vein, we have had more than 75 countries from around the world reach out to President Trump and his team here at the White House to negotiate better trade deals for the American worker. We have been overwhelmed with the amount of requests from countries around the world. I'll let the Secretary speak to that. We will continue with the tailor-made negotiations that I spoke about yesterday. In the meantime, there will be a 90-day pause on the reciprocal tariffs as these negotiations are ongoing, and the tariff level will be brought down to a universal 10% tariff. The Secretary here has been a huge part of the President's trade team, of course, and will continue to lead these negotiations moving forward to look out for the American worker, which is always President Trump's goal. So I'll kick it over to our great Treasury Secretary, Scott Bessent.
Good, thank you. And we saw the successful negotiating strategy that President Trump implemented a week ago today. It has brought more than 75 countries forward to negotiate. It took great courage for him to stay the course until this moment. And what we have ended up with here, as I told everyone a week ago, they are in this very spot, do not retaliate and you will be rewarded. So every country in the world who wants to come and negotiate, we are willing to hear you. We're going to go down to a 10% baseline tariff for them, and China will be raised to 125 due to their insistence on escalation.
China is showing no sign of backing down from an all-out trade war. Officials here have announced even more countermeasures. 84% tariffs on U.S. imports, no longer 34% as they announced last week to match the latest round out of the U.S. So the gloves, as they say, are off. This is going to impact U.S. farmers, sending goods like soybeans and poultry to China, as well as some energy products. And there's talk of even more to come, like a ban on Hollywood films and possibly cutting off talks on fentanyl cooperation. The 104% tariffs on Chinese goods are going to hike the cost of everything, from clothing and shoes to toys and electronics, all the things that are used in American homes. Also overnight, President Trump tripled duties to 90% on small packages that had been coming into the U.S. duty-free from retailers like Shein and Temu. President Trump has said that China wants to make a deal badly, but there is no indication here that Beijing even wants to talk, let alone line up with dozens of other countries now looking to the White House for relief.
Hey everyone, welcome back to the channel. If you're new here, hit that subscribe button and turn on the bell so you don't miss out reactions to the biggest political and economic news shaping our world today. Today we are diving into a hot topic, Trump's tariffs on China, why he refers to them, and how the market responded with a surprising rally. Let's get into it. Alright, so here's the breakdown. Back when Donald Trump was in the office, he launched a trade war with China. His administration imposed tariffs on hundreds of billions of dollars worthy of Chinese imports, starting in 2018. The goal, according to Trump, it was to correct unfair trade practices, reduce the U.S. trade deficit, and bring back American manufacturing jobs. Tariffs hit a wide range of products, from steel and aluminum to electronics, toys, and clothing. China retaliated with their own tariffs on American goods. The trade war escalated fast, affecting global market, businesses, and everyday consumers. Now, fast forward to 2025. Trump is back in politics spotlight and just announced a reverse on a large portion of those tariffs. Yes, you heard right. After years of hardline trade rhetoric, he is walking some of it back. The administration said it's a strategic realignment, but analysts say it's a response to inflation, supply chain stress, and pressure from American business. Let me quote this. Trump said, "We have accomplished what we set out to do. We've sent a strong message to China. Now it's time to stabilize our economy and strengthen our domestic growth." So, why now? A few key reasons. Inflation. American consumers and businesses have been shouldering the cost of these tariffs. Studies show U.S. importers paid over $100 billion in duties during the trade war. That cost gets passed down, meaning higher prices for everyone. There is an election strategy. Trump's eyeing voters who are feeling the pinch. Lowering prices by easy tariffs could be a play to win over moderate and working class votes. Global supply chains. With ongoing disruption, many industries, from tech to auto, are dependent on China parts and materials. Removing tariffs could relieve bottlenecks and boost production. There is business pressure. Major U.S. companies, especially in retail and manufacturing, have been lobbying for tariff relief. This reversal might be a nod to Wall Street and corporate America. Now, here's the juicy part. The market went crazy after announcement. The Dow surged from 700 points. Tech stocks shot up. Consumer goods companies rallied. Why? Simple economics. Tariff function like tax. Remove that tax and companies expect lower costs, higher profits, and smoother supply chains that boost investor confidence. Also, this inflation cooling, the Fed may erase up on interest rate hikes. That adds even more fuel to the market optimism. But here's where it gets interesting. While the markets celebrated, economists are divided. Some say this is just a short-term sugar. Yes, stocks are up, but we're still in a delicate global economic balance. China hasn't responded yet. Will they see this as a win or make their own move? Others argue this was inevitable. The tariffs didn't lead to massive rationing of jobs as promised. In fact, some American farmers and manufacturers were hurt by Chinese retaliation. So, while investors are cheering, the big question is, what's next? Let's not forget the politics. Trump reversing tariffs is more than an economic decision. It's a chess move. He's repositioning himself not just as a tough guy on China, but also as someone who listens to real Americans feeling the weight of rising cost. But critics are calling it hypocritical. After all, his entire trade policy was built around standing up to China. Now he's softening. Some say it's flip-flopping. Others say it's smart pivoting. What do you think? Smart move or political stunt? Do your thoughts in the comments. So, how does all this affect you? If you are a consumer, prices on electronics, clothes and household goods may go down, especially for items made in and assembled with Chinese components. If you are an investor, short-term gains in stock, especially in retail, tech, and manufacturing. If you are a small business owner, lower input costs and fewer delays could help you stay competitive. But remember, this could also reignite debates about dependence on China, American jobs, and long-term trade stability. In the end, this move could reshape not just us China relations, but also how America handles global trade going forward. The market celebration is a clear sign. Investors like predictability, lower cost, and access to global supply chain. Whether that lines up with Trump's long-term agenda, only time will tell. We'll be watching this closely and keep you updated. Thanks for tuning in. If you found this breakdown helpful, give it a like, share it with someone who follows the market, and let me know your take in the comments. Are you for or against tariffs? Roll back. And of course, subscribe for more political and economical reaction right here on the channel. Until next time, stay informed, stay curious, and keep asking the hard questions.